welcome to our investment insight series, Magellan Minutes, in which our investment team dissects the markets and take a deeper look into sectors and stocks in our global portfolios. My name is Jennifer Herbert, Key Account Manager at Magellan, and over the next 10 minutes, I'll be talking to Magellan's Head of Franchises, Rosie about our current views on the quick service restaurants that we hold in the portfolio. Thanks for joining us, Rosie.
Thank you, Jen.
Rosie, Magellan is an investor in the restaurant giants, including Starbucks, McDonalds and YUM Brands. How did Magellan think about its investment in these businesses as COVID started to spread?
So, Jen, it's really interesting because these companies generally perform in a pretty defensive manner, particularly when we see this kind of downturn. And we knew pretty early on that COVID was going to be different because in some way, shape or form, they were going to have to probably close some portion of their operations. And so that was quite different as we went into this. There's really kind of four big picture questions that we thought through. Firstly, what were governments going to do to the restaurants? And by that I mean, were they going to force them to close completely? Maybe it was just the drive-through, or could they keep the drive-through open? Could they do takeout? Would they have to close the dine-in? Could people operate with gloves? So it was, what were they actually going to do? And it was different for every country around the world. The second point was, what were the governments going to do for the restaurants? So in some cases in Europe, for instance, we saw governments prepared to pay the wages for workers at the restaurants, and that made a big difference to, say, a McDonald's franchisee or a YUM franchisee in terms of their ability to keep going during this downturn. The third thing, though, was after you could sort of consider that, what would customers be prepared to do? What would the clients be prepared to do? Because would they be, let's say the drive-through was actually open, would people want McDonald's or someone else cooking their food for them in this environment? And then lastly, the big question was, how long is this going to go on for? And so there was a lot of kind of permutations and combinations in terms of how this could play out. And so what we really did is sat back and thought about, did these companies have the operating flexibility and the financial flexibility to actually sort of pivot, to move, to get around and to be able to kind of work through this, what was going to be a very choppy trading environment. And ultimately, it was difficult to see that exact path forward, but when we looked at all of these companies, the commonalities between them were, and this is sort of in line with how Magellan thinks about its investments generally, but what we had was some very strong brands. No one was going to forget that you go to McDonald's and buy burgers, right? Just because they weren't driving past the Big M's every day. They had strong management teams. They had a reputation, a corporate reputation for being focused on cleanliness and sanitization. And that obviously in this environment was very important. And then after that, and the other thing they'd done actually was invest in technology. So a lot of the companies McDonald's had purchased dynamic yield, which is, it helps in the drive-through in terms of making that move more quickly. Then a range of other investments that these companies have made just around technology, which is important. So they were kind of the commonalities to help them move through this. Then the differences were, there were puts and takes for all the different companies. So for instance, both YUM and McDonald's in the US, about 95% of those stores are equipped with a drive-through. So that really matters. And in fact, even before COVID, about 70% of their sales came from that drive-through. And so they had a way of getting that product to customers, even if the dine-in was actually closed. So that was important. On the other side, Starbucks, they only had about just sort of a bit over 50% of their stores were equipped with a drive-through. And so they're in a different position, but Starbucks actually did not have a lot of debt on balance sheet relative to the others. And so they had a bit more financial flexibility. So we felt okay about that. Now, YUM had a lot more leverage, but at the same time, YUM has 3 brands to it. So it's Pizza Hut, KFC, and Taco Bell. So they had a bit of flexibility there. And they also didn't have a big breakfast business. And we found that the breakfast business, just because people are not going to work, they're not in that usual routine, that particular day part has suffered a bit more than others. Now, McDonald's didn't have quite as much leverage as YUM. It did have the breakfast, but it had the drive-through. And so there was a whole range of different kind of things they had to contend with as you looked at each individual name. But overall, that strong brands, the management teams, the investments in technology, and some level of financial flexibility is what we thought meant that they would be able to work through this pretty difficult operating period.
That's really interesting. So has everything panned out the way that you thought it would?
Well, it's been really interesting, actually, because if you look at Starbucks, for instance, Starbucks said, well, let's try and keep that takeout option open and have people come to the stores and pick up their coffee and leave again. And they found people were just crowding the stores. It was amazing. When they had the opportunity of maybe dying or missing out on their Starbucks, they're like, well, we're definitely going to dice with death because there's no way we're going to give up on our Starbucks, which is, we love that kind of consumer commitment to the product over the long term. But in the short term, it did mean that Starbucks just felt that the only responsible thing to do was to actually close those stores to that takeout. And so they did have a few drive-throughs, as I mentioned earlier. And even though we saw queues for that drive-through, like a line of cars going around the block twice in some instances, it still wasn't enough to offset the lost sales from just the takeout and that regular customer coming in each morning. And so their sales dropped by about 60 to 70%.
That is extraordinary, the extent that people will go to get their coffee fix. I guess it's not a bad thing for Starbucks in the longer term.
Agreed. And we've seen Starbucks reopening their stores in the US last week. And so we'll start to see hopefully some of that demand start coming back through as they get those reopening, but we're watching that pretty closely. And then as we think about sort of McDonald's and Yum and McDonald's, they didn't have that same drop in the sales. So it was around 25% just because they had that drive-through business. And it's interesting actually, Yum with those three brands, when we look at some of the credit card data that we track, it actually looks like a lot of their sales have come back almost back to where they were pre-COVID, at least the credit cards, which is, great outcome for them. I think we're not seeing quite the same rebound in McDonald's as yet, and that's partly because of that breakfast business. It is a big part of the McDonald's kind of revenue stream. And so as people start to come back to work and we see the economies reopen, we expect to see it come back up. But sort of right now, there's a bit of a differential between the two companies in terms of how they're performing. And then I think the other thing that I mentioned earlier in terms of what are the potential variabilities and outcomes was how long was this going to go on for? And that was a little bit of a surprise as well. We're sort of closely tracking what's happening in China. Obviously, they started with COVID earlier than other parts of the world. And ultimately, China had about 3 weeks of hardcore lockdown. And that, because they don't have the drive-thrus, it was a lot more of a drop in sales across all of these companies. And then they reopened 3 months on, and a lot of these companies that reported last week, and they talked about same-store sales being down between 10 and 35% or so still. So we're about 3 months away from when the stores all kind of started to reopen. They're certainly all reopened now, and we're still seeing that drop in same-store sales. So I think it's going to take a little longer than maybe we originally anticipated to reopen those stores, but on the positives, or to get those sales volumes back to where they were. On the positive side, what we are seeing is that it's got nothing to do with Starbucks themselves or Yum themselves. So when I sort of talk about that 10 to 35% down, there's a real range across different stores. If you're a store in the city where people are back to work, the sales are doing fine. It's more that there's some areas like an airport or a transportation hub where we haven't seen those volumes come back yet. And so that means that this is more of a short-term issue. As those things start to reopen, and hopefully that process continues, then we expect to see those sales come back. This is not sort of permanent damage to those brands or people decide they no longer want to go to Starbucks or a Yum or a McDonald's. So that's important too.
So what does the future look like for these quick service restaurants?
So I think a lot of the trends that were already in train are actually being accelerated under COVID. So if you think about some of the things they've been looking at the last few years, it's things like mobile order and pay. So maybe before a few people were using it, but a lot of people hadn't gone to the effort of actually just downloading the app. And COVID's really made that a necessity, and so they've gone ahead and done that. And so I think once we come out of COVID, we're not going to see a drop back to a much lower level of mobile order and pay. In fact, we'll continue to see a higher level of mobile order and pay going forward. So that's one thing. I think it's really important for these brands to have a direct way of communicating with customers. So either some kind of loyalty program or an email distribution list, some way of telling them the stores are open or keeping them up to date on what's going on. That's proven to be very important during COVID. Having a product that travels well is important for these companies. And then more broadly, as we think about some of the bigger picture, it's what is going to change in the way that consumers conduct their life, essentially. So this whole working from home thing, is that going to become more of a semi-permanent or a permanent feature for some of these companies? For instance, Nationwide Insurance last week came out and said that they're going to close all of their smaller offices. And so an additional sort of 4,000 employees were going to move to telecommuting permanently. And so what does that mean? So if you're stuck at home, the opportunity to maybe go to a coffee shop and to sit with your laptop for a couple of hours and just have some level of human interaction might actually become more valuable in that environment than it is today. But on the other side of that, we're also thinking about, well, what does that mean for that morning commute where you used to grab a coffee on your way into work? Well, that changed now. That drive-through might become increasingly important, so you can grab it when you're out and about in any case. And so we're thinking through a lot of those trends. Ultimately, I think that these strong brands, good management teams, and those investments in technology that I talked about earlier is what's really going to be important as they look to navigate the future.
Rosie, thank you so much for your insights. If you have any questions, please don't hesitate to contact one of the Magellan team, and please feel free to share this update with clients or colleagues as you see fit. Take care and stay safe.